What's going on, guys? My name is Richard, and welcome back to another weekly watchlist video sponsored by Marketsmith. As always, we'll talk about the fundamentals, so the sales growth, earnings growth, return on equity, fund ownership of all the stocks on my focus list, and also share the levels that I'm watching for each one and the setup that I plan to use to trade them. And before I get into the video, I do want to clarify that at this time, my current view is that we are in a correction at this time, and I'll be waiting for that key fall through day before I really get aggressive in trading these stocks. But getting into the analysis, we'll start with our first stock, which is Beyond Meat. Looking at the earnings and sales, you can see that it wasn't profitable this past quarter, but you do have very consistent revenue growth going back the past few quarters. And overall return on equity was up 2.1%, and sales were up 69% this past quarter. And taking a look at the annual estimates, you can see in 2020, it's supposed to be up 75%, although revisions are down. And in 2021, it's supposed to have a further boost of 743%, although once again, revisions are down. The EPS rating is a 29, the Group RS is a D+, the SMR rating is a C, the accumulation distribution is a B+, and the overall composite rating is an 81. And taking a look at the fund ownership numbers, you can see a nice increasing trend. You do have one high-quality fund investing into this stock. And taking a look at the chart, you can see that the RS line has been increasing over the past few weeks. The overall rating is a pretty strong 92, and so far the chart is showing a promising sort of cup pattern here and could be starting to form a handle at this time around the 150 level. And taking a look at the chart in TC2000, you can see it's in this nice cup-shaped pattern and has been moving up as the overall market has been correcting. And the buy point for me would be a break above this short-term pivot above 162.50. And let me turn on the drawings here. And overall, I want to see above average volume as it moves up through this level. And that would be a promising signal to buy for me. So that was Beyond Meat, and next up we've got CELH, and overall taking a look at the earnings and sales, you can see excellent growth this past quarter, earnings up 163%, sales up 86%, and return on equity up 3.3%. And taking a look at the annual estimates, you can see in 2020 it was supposed to lose 50%, although revisions are up, and in 2021 annual EPS is supposed to grow 125%, and you can see revisions are up as well. And overall, the EPS rating is a 39, the Group RS is a C, SMR rating is an A, accumulation distribution is a B+, and the overall composite rating is an 86. And overall, you can see a nice increasing trend in the number of funds, especially in recent quarters, but you do not have any high-quality funds investing into this stock. And looking at the chart, you can see that the RS line was moving up, but it has been kind of declining over the past few days. And overall, looking at the chart, you had a nice earnings gap up on above average volume, but since then, it's been kind of wide and loose here. And you can see it's trying to form a base and is finding support at that key 50-day and 10-week line. And as for the technicals, I like what I'm seeing here. You can see it's finding support at that 50-day right here. And I want to see a continued bounce upwards on above average volume and potentially a green dot early next week, which would be one potential entry, or you could buy it as it breaks through the 21 EMA. And eventually I want to see it challenge this pivot at 2420, eventually break out into all-time highs above 2676. So that's CLH, and next up on the list, we've got CrowdStrike. And overall, taking a look at the earnings and sales, you can see excellent growth here. Last quarter, earnings up 125%, sales up 84%, but return on equity was down 0.7%. And overall, you can see there's a lot of growth expected in 2022, up 257%, and the revisions are up as well. And overall, the EPS rating is a 78, the Group RS is a B, SMR rating is a D, accumulation distribution is a B+, and the overall composite rating is a 95. And you can see a nice increasing trend in the number of funds, especially in the two previous quarters. You do have one high-quality fund, Fidelity Contra Fund, investing into CrowdStrike. And overall, looking at the chart, you can see it was kind of wide and loose here, especially on this big peak up day after earnings. But overall, you can see it's hanging in there above that 21 EMA. And as for the entry setup, I want to see a break through this downward trend line, or potentially above the short-term pivot at 143.70. And overall, I think this is one of the potential leaders of this next leg up in the market. And I'll be watching the stock very closely. Next on the list, we've got DraftKings, or DKNG. And overall, looking at the earnings and sales, you can see it's not yet profitable, but it does have decent revenue growth, 24%. And overall, you can see return on equity is pretty poor as well. Last quarter, down 71.3%. And overall, looking at the annual estimates, you can see it's not supposed to be profitable within the next 2 years, and the revisions are down as well. The EPS rating is a 52, the Group RS is an A+, the SMR rating is a D, accumulation distribution is an A, and the overall composite rating is a 97. And overall, you can see a nice increasing trend in the number of funds, especially this past quarter, going from 65 funds to 242. That is very significant. And overall, you have a whole bunch of high quality funds in there as well. And overall, looking at the chart, you can see it just emerged from a stage 3 consolidation and so far has been holding up excellently versus the market. And you can see that clearly in the RS line, which was basically going vertical. And overall, the RS rating is a very strong 99. And as for the entry setup, it has formed a short-term consolidation right here. I'm looking for a buy over the short-term pivot above 55.70. And this is a little bit riskier because it is somewhat extended from this prior base. So this is more of a swing trader setup versus a position trade. And overall, I like how volume has been decreasing during this consolidation. And as I said, it's been holding up very strongly versus the market. So that was DKNG. And next up, we've got XP World Holdings. And overall, taking a look at the earnings and sales, you can see excellent growth here, above 100% earnings growth the past 3 quarters. Last quarter, earnings up 375%, sales up 33%, and return on equity up 13.6%. And you can see from the annual estimates that it's just supposed to be profitable in 2020. It's supposed to get a big boost in 2021, up 61%, and the revisions are up as well. The BS rating is a 78, the Group RS is a B+, the SMR rating is a C, accumulation distribution is an A+, and the overall composite rating is a 97. And looking at the fund ownership, you can see a nice increasing trend over the past 2 years, but you do not have any high quality funds investing into this company. Taking a look at the chart, you can see this is a potential high tide flag, and overall during this correction has held up remarkably well. And overall, the RS line is basing on the price, and the overall RS rating is a very strong 99. And as for the entry setup, what I want to see is if we go to the chart, a break above the short-term pivot at 40.65, and eventually I want to see it challenge the previous all-time highs at 46.58. And overall, you can see that it's increased remarkably over the past few months, and since this point is up almost 400%, and really hasn't given back that much at all, which is a sign of strength. And overall, you can see this decrease was about 24%. So I think this is a promising stock to watch. And overall, you could also enter on a green dot setup early next week. So that is XP. And next up, we've got FSLY. And taking a look at the earnings and sales, you can see decent growth in terms of revenue. And last quarter, earnings were up 118%, sales up 62%, although return on equity was down 6.8%. And overall, looking at the annual EPS estimates, you can see in 2020, it's just supposed to be negative, but in 2021, it's supposed to get a boost and be positive overall. And looking at the EPS rating, it's a 66. The Group RS is an A, SMR rating is a D, accumulation distribution is a B+, and the overall composite rating is a 96. And looking at the fund ownership numbers, you can see a nice increasing trend over the past 2 years, but you do not have any high quality funds investing into this stock. And looking at the chart, you can see it's been tightening up recently and had a move up last week. And overall, this kind of nullifies the head and shoulders pattern, which really should have caused a breakdown here. But instead, we have an upside reversal here and a retake of the 50-day moving average. And overall, you can see the RS line has been basing along with the price during this consolidation. And overall, the RS rating is a very strong 99. And as for the entry setup, what I want to see is a break through this downward trend line if you treat these as outliers up here. And I want to see that breakthrough on volume and eventually a challenge of this pivot at 99.69, so at the 100 level, and eventually a breakout into all-time highs above 117.79. So that's my plan for FSLY. And moving on, we've got NIO. And looking at the earnings and sales, you can see there's not much here, except last quarter's sales were up 140%. And looking at the annual EPS estimates, you can see in 2020 and 2021, it's supposed to be negative. And overall, you can see the EPS rating is a 57, the Group RS is an A+, the SMR rating is a D, accumulation distribution is an A, and the overall composite rating is a strong 97. And looking at the fund ownership numbers, you can see a nice increasing trend over the past 2 years, but you do not have any high-quality funds investing into this company. And overall, you can see it's moved up well from this stage 1 cup and handle and has been going sideways as the overall market has been correcting, and the RS line has stayed pretty much constant, with the overall RS rating at a very strong 99. So as for the entry setup, what I want to see is a break through this downward trend line on above average volume, or potentially a green dot early next week. And eventually, I want to see it challenge this previous pivot at 20.25. Eventually, the previous all-time highs at 21.05. So that is NIO. And next up, we've got NVCR. And overall, looking at the earnings and sales, you can see excellent growth here, especially in terms of earnings. Last quarter earnings up 300%, sales up 34%, and return on equity of 5.5%. You can see it's just supposed to be profitable in 2020. It's supposed to get a big boost in 2021, up 94%, although revisions are down. The BS rating is a 78, the group RS is a B+, the SMA rating is a C, accumulation distribution A+, and the overall composite rating is a 98. And overall, you can see an increasing trend in the number of funds, and you do have 3 high-quality funds investing in it as well. And overall, you can see from the chart that's moved up well from the stage 1 cup with handle, and you can see it's up 34% in a matter of days, up 23 days, and has held up really well during this correction. And the overall RS rating is a very strong 93, and the RS line was pretty much going vertical during this uptrend. And as for the entry setup, what I want to see is a breakthrough this short-term pivot at 110.87 and potentially a green dot early next week as well. And along with NVCR, there are some other high-tight flags I'm watching, such as CRWD or Gravity Co, and also LMPX, which has really strong up-down volume. So those are some bonus picks as well. Anyway, that is NVCR. And next on the list, we've got SQ. And taking a look at the earnings and sales, you can see decent growth here. Last quarter earnings were down 14%, sales were up 64%, and return on equity was up 20.1%. And you can see in 2020, it's supposed to take a hit in terms of annual EPS, down 34%, but in 2021, it's supposed to bounce back up 126%, and the revisions are up as well. The EPS rating is a 73, the group RS is an A, SMA rating is a B, accumulation distribution is an A-, and the overall composite rating is a strong 98. And looking at the fund ownership, you can see a nice increasing trend, and you have 6 high-quality funds investing in this stock as well. And overall, looking at the chart, you can see it's been basing and pulling back the past few weeks, and overall, the RS line has actually been increasing over the past few days, and the overall RS rating is a very strong 98. So that covers the fundamentals, and looking at the chart, you can see I want to see a breakthrough this pivot at 159.00, and eventually a challenge in the previous all-time highs above 170.61. So that's my plan for SQ. And last on the list, we've got an ETF, the Invesco Solar ETF called TAN. And overall, this group has been moving up quite well over the past few months and has been really showing relative strength during this correction. And you can see from the stage 1 consolidation, this is up 58% and is right near all-time highs once again. So my plan for this ETF is to buy some shares once it breaks through this pivot at 57.95 on above average volume. You can see that was resistance at on this day and also on this day, and had a really strong performance this past Friday. So that's my plan for TAN, and overall my top 3 setups for this week are CELH as it tries to bounce back from the 50 SMA, CrowdStrike as it tries to break through that downward trend line, and also NVCR as a potential high tight flag. So I hope you guys enjoyed this video, and if you did, please go ahead and leave a like down below and subscribe if you're new to the channel. And best of luck next week, and I'll see you guys in future videos.